All right, welcome everyone. Welcome to the Hurley Investments Market View commentary for the last Monday in April, Monday 25th, 2022. I first need to apologize to this group. I had my phone on like do not disturb. So for the last 2.5 weeks, texts or rings coming into me was on a do not disturb phone. Kind of stupid when you have your toll-free number forwarded to it. I apologize, but I have the correct setting. And please, if you ever run into that, Steve and Peter, I know you guys are new. The group welcomes you here with us now. If you ever run into that where you get a, hey, it's a do not disturb, call me, send me an email. I don't care what 4-letter words you use for me. Just say, get your phone so I can talk to you. With that said, I want to just make a couple changes here, a couple understandings. Here at Hurley Investments, we do 2 webinars a week so you know what your money is doing. And really what that is, or what we're trying to offer you, Kevin, I don't like this. Kevin, I don't understand this. Kevin, why are you doing this? Kevin, why do we not have the results right now that I think we should have compared to the market? These type of questions we try to do on a Monday evening and a Thursday morning. This Thursday morning, I will be in Kansas City meeting with a couple firms, and Keeve is coming back from London. So we will be canceling this Thursday morning's trade findings and adjustments. But what we're trying to do, in all honesty, when people ask, well, why do you do this? You know, why are we doing this? And the short answer is because it makes us put in a 40-hour work week. So many people in our industry, odds and update, they don't do anything. They golf, they play, they don't research their stocks, they put you in a fund. It's garbage. So the real reason why we do these 2 webinars is so you know what your money's doing, and it makes us work. It makes us prepare. It makes us look at our positions we're in. It makes us understand what's happening in the market and if we should be in or out of some positions. And a lot of you most recently have asked, and I guess the question is, did you know your core holdings are still not moving even after last year? And the question is, of course we do. And this is going to sound new. Some of you have been here for a while, but for Steve and for Peter, just a couple ideas. And I'm just going to put this, I'm just going to say this out loud. It's going to be different than what you guys do. We build portfolios, and something that we don't do, like some managers, we don't just run into risk. We don't just put you into something right away. It might take us 3 months to build a portfolio. And obviously we're moving quite a bit in right now because we're at earnings. Now, what we do around earnings. Around the time a stock has it's 83 to 84, I don't know exactly, percent chance, I can't type, chance of losing 10% or more. Really, that percent or more usually comes down to a 16.6%, which is 1 standard deviation. we add protection. And for the earnings events, we put the protection as close to the current price of the stock as possible. And there's a reason behind that. There's a reason behind that, and it's kind of important, but got it. I'm reading a couple things that have coming in. But what we do is we add protection. Again, we use what's called the long put option, and that long put option, I love it. Long put is the right to sell a stock for a certain period of time at a certain price. Now, the reason why I'm showing that is because some people are here and they're like, okay, Kevin, well, we had an update today. And we did have an update today. In fact, we had a pretty nice update. And this week, we've got some earnings coming up. This week, we have Google L and Visa tomorrow. We have Boeing, Ford, and Facebook on Wednesday. We have Apple on Thursday, some of our core holdings. I believe we also have Amazon and Microsoft this week. It is the mega tech week of earnings. So just to take a peek, we've got some profits with the right to sell Apple at 170. Well, we paid $5 for it. We have some profits. We need to move this down to being closer to at the money, hopefully 162.50, and book some profit on Apple. Boeing, we have Boeing puts with some profit. That 12,000, have the right to sell Boeing at 185. Right now it's trading at 175. We should roll at $10 down and book that profit. Baidu, love Baidu. We still have the right to sell Baidu up at 139. We've got $369,000, which is probably $300,000 of profit on Baidu. It's trading at 16.50. It's time to roll this out a couple weeks and down in price to book that $300,000 of profit on Baidu. Disney, have the right to sell it at 130. Worth $11.50. I think this one's like a $4.60. We probably have somewhere in the neighborhood of $165,000 to $175,000 on a stock that's trading at $119.95. We should probably roll that down to 120. Capture that profit. Amazing. When we started out with like 1,500 or 1,800 shares of Facebook, it's falling again. We still have the right to sell it at 225. And everyone that started out with 300 shares of Facebook, tomorrow when we book, or we plan on booking, moving this down to like the 185 price target, that's $40 lower. We've got some serious profit in our Facebook protection. Out of our money right here, again, probably another $175. For all of you that have been in Facebook, tomorrow we're basically going to double up on your Facebook shares. And the neat thing is, we're doubling up on these Facebook shares or dollar cost averaging. We use the profits from puts to dollar cost average without asking you to put more money into your account, which is huge, which is neat because for some people on Facebook, we got in at like $290 and it's now trading at $185. The neat thing is on the Facebook on the way down, we've made up roughly 90 to 93-ish and a half percent of that downward movement. And we're doubling up on those shares. We're doubling up on those shares. In fact, if we were to list our big stocks from core holdings that have been losers, not Apple anymore, Apple bounced back, it would be Boeing. It would be Bank of America right now. It would be Baidu, the Chinese Google. It would be Disney. It would be Ford. It would be Facebook. It would be Square. It would be Under Armour. It's not Visa. There are probably some more I could throw in there if you gave me just a second to look through some of our stocks. Costco's down to 568. Good thing we got out of Costco up at 600, right? Costco got fully valued. We got out of it. JP Morgan's taken a pretty good hit. Micron's taken a pretty good hit. We're going to be, that's our technology, our new technology play for going into this year and into next year. We've taken some good hits, and some people ask me, and again, Steve and Peter, you asked me, Kevin, you talk about valuations and I don't understand it. So the short answer is, Peter and Steven, to help you understand it, I'm going to put the link in here, but for valuations, go to the Hurley Market View commentary. That's 01/10/2022. And I'll put a link in here so that you'll have it. But here's my simple statement. And I know a lot of people throw, a bunch of terms around, a bunch of, hey, if I talk smarter than you, I know more than you. I'm sorry, that's crap. That's BS. We don't do that here. But valuations, in my opinion, valuations are the warning signs that tell us about an upcoming drop in the stock price. I'm going to use a term, market compression, which in all reality, if I was going to better explain that, that's nothing more than a pullback, a correction, a bear market. And one of the biggest things, if you work money, if you look at money distribution and money exchanging, in fact, money coming in and out of funds is pretty funny. One of my friends, longtime client of mine, sent me the same article that I saw, but I saw it through the bank itself, not through Market View. But it talks about money shifting out of funds and into different markets. It really talks about recessions. And the last thing to help everyone here out, to better understand something I might say tonight will become irrelevant by tomorrow morning. I mean, to put it in plain simple comments or I guess ways to describe it to you, it's this easy. The market is a living, breathing, ever-changing, what do you want to call it? Let's just call it a beast or friend, depending on what positions we have in play. So some of you may have said, well, Kevin, why didn't you take off all this protection today? Why didn't you roll down and book that $300,000 on Baidu, $175,000 on Facebook, $175,000 on Costco, excuse me, on Disney? And one day doesn't make a trend. In fact, probably one of the most important things that we try to push or try to help everyone understand, protection is the key to a 2008, a falling knife, a stock that may get delisted. I could name all kinds of reasons why stocks fall, but it really comes down to this. Throughout your life, if you insure your car, your house, your life, your health, it just has been smart to insure your portfolio. And Steve and Peters, I showed you, last year was not one of my better years. In fact, last year, what a ridiculous type of year where good blue chip stocks, Boeing with a 10-year, almost a 10-year inventory behind it. Bank of America did really well and dropped and lost over 25% of its value this year. Baidu, it's basically an index of China, second largest economy. Disney, Disney shooting its own foot with this woke. Watch Chapek get fired. Ford with chips. Facebook with preparing for the next step or the next evolution of their product. Square, a small business, got hit by COVID, ready to come back. Under Armour, great product, great alternative to Lululemon and Nike for a cheaper price. Costco, great company making money hand over fist. JP Morgan going to make great money with the spreads that are increasing. Micron chips, I mean, we're in blue chip stocks that are great stocks to be in, that for the first time last year, a bunch of our blue chip stocks as a whole just never took off. All we did is continue to compile and add more and more shares. With that said, someone just made the comment, don't forget a black swan event or an attack. And in all honesty, it's been pretty neat. We were profitable in 2008. We were profitable in 2010 on some stocks that had some news-driven events that really tanked. We had protection on because it was left over for earnings, as we protected during that 6-week period. 2 weeks before and 4 weeks after the earnings event is when a stock is most likely to lose 10 or 15%. I don't know the actual figure there, but usually it's about 16.6, one standard deviation. We've been protected for it, but no, I do not always stay protected. We just went through the biggest bull run in market history, and if we always stayed protected, your stocks would have to literally at least book a 17 to 18% to make up for the cost of that insurance. So I do not protect for black swan events. I don't protect for something that happens less than 1% of the time, because 99% of the time that event is not going to happen. But what I can tell you, even though I do not protect for a black swan event, if one were to occur, we can add protection on the next day or very quickly. So nothing but a thing. We can get our protection on as we need to. Peter and Steven, something to tell you. There are some people I've picked up last year that I still haven't charged them a penny. If we can't make a couple years of our fees right out of the gates, and then we can't do it on a second year, we're going to give them a break. There's no reason to charge them if we didn't make at least that couple years of fees up front. So glad to have you with us. That's who we are, and that's what we're up against. To give you guys a head up, let's talk about our markets today. Couple things that stood out to me that you should know about. China is shutting down, and they are caging is the word that was used. Don't know how to spell it. Caging people in their homes. They're putting up cages outside of buildings and streets to lock people in. I really thought it was ironic because the reports that were coming out last night, in fact, I was texting Kiev in London at between 2 to 3:30 in the morning, my time. And Kiev was like, dude, oil's down because China is shutting down. And just as a heads up, China uses roughly, and this is CNBC that I'm getting this from, or it was Bloomberg last night, 14% of the world's oil. And now they're shutting everything down. They're not importing. There's a backup in their ports once again, which is why all of a sudden we saw the huge drops in oil. So a question for the group. If China shuts down for 2 to 6 weeks, where is that oil going to go? Where's that China oil going to head to? I think it's a pretty simple answer there. But where? So let me read a couple of these. Middle East. So typically, Steve, the Middle East exports. They're not really consumers of their oil. They export it. I have one that says anywhere else. Someone said India. I wasn't thinking about India, but definitely India. They're becoming more and more upcoming, more of a first world type of, that's what I'm looking for, a first world user of natural resources. So definitely. And Peter, I would agree with you. You know, Europe, Germany, I would assume that the gas that's being shut down from Russia would go to Europe. So it's not like it's going to get used, but man, did they take a beating today. Last night, China was down 6%. Asian markets were down 3%. Europe followed, being down between 2 and 3%. We looked pretty bad today. There was a while today we looked pretty darn bad. Yet the market for the U.S. has had 4 down weeks in a row. Things are looking to turn. For those of you that did not know this, the S&P 500, right? Down roughly 13%. The NASDAQ down 20%. I don't have the Dow right here only because I wasn't paying attention, but we're going through a correction. And the main reason that we've had this concern in the last 4 weeks, the main reason our markets are down goes to rate hikes, inflation, and recession fears. So, are we going to have rate hikes? Yes, we should have had rate hikes. In fact, I like how we bounced back. But let's face it, Powell and our group of FOMC chair people, how would I say that? There's no way to say it politely. They suck at explaining the narrative. The narrative is we're going to have a 50 rate hike here in May. So May, I think it's May 13th. Let me take a quick check. I have it all written down. It is May 4th. Just so you know, we will have protection on all the accounts for all the equity stock positions on May 4th, because we're going to go through a 50 basis point rate hike to maybe a 75 point rate hike in our interest rates. It will happen at that May FOMC meeting. We know about it. Everyone knows about it, but we will still get that panic sell-off, just like we did for a week and a half on the last rate hike decision in March. Well, Kevin, everybody knows. In fact, it's funny because some people are talking about it's priced in. And technically it could be, but I'm not a believer in it. I don't think it's priced in. We haven't had this type of rate hike since, God, I think it's 83 or 84 in the early 80s. So we're talking about 40 years ago. With all due respect, most of the money managers nowadays were not managing money back then. And because of the laziness of my industry, they don't research it. They don't see what happens. They've never gone through a 50 to 75 basis point rate hike. It crushed the markets. Do your research. Find out how much, the stock market fell in the 4 weeks after it. We're going to be prepared and we're going to be protected, ready for probably an overreaction to a rate hike that our economy can certainly handle right now. Guys, we're looking for gridlock in the midterm elections. The Republicans have to win the House or the Senate. They're both up for grabs this year. If they win one, because of the bickering and the fact that they don't work well together, unless you're a couple named Republicans that act and vote on a Democratic platform, we want to see the Republicans take control of the House or the Senate, one or the other, so that there's gridlock, so nothing can go through. Markets love gridlock. You want to see a remarkable return or turnaround at the end of the year, a 20-25% swing in the market in 6 weeks, that would be the catalyst right now. The catalyst would be a gridlock in Washington so things can't get passed, which gives the market a sense of ease that there are going to be no surprises for a 2-year period of time. All right, let me go through some things here. Here are earnings coming up. Again, for us, the big ones to pay attention to are tomorrow we have Google, L, and Visa. Visa's after the market closes. Boeing on Wednesday before the market opens. Ford after the market closes. And Facebook after the market closes on Wednesday. Thursday, Apple after the market closes. It's going to be interesting because where is it? Microsoft reports tomorrow. We have durable goods and some interesting, some pretty interesting economic reports. But Microsoft reports tomorrow. Microsoft could move our futures or move our markets on Tuesday or move our markets on Wednesday. Obviously, Wednesday, we're going to have Amazon, which moves the market, Apple, which moves the market. So we just got to understand we could have some swings in the market that are not related to your shares, that are just going to follow by some of these bellwether stocks. With that said, I found it pretty interesting. I normally have a briefing here. I normally put the briefing in here. As of today, it hasn't changed. This is last week's. It's not in here. They tell you that, hey, we're going to release one. Normally it's done Monday morning, but pretty interesting. I actually tell you, hey, the next installment of the Big Picture will be posted the week of April 25th. They don't know. In fact, in all honesty, nobody really knows where our markets are going right now. I absolutely loved the market recap from the Pulse Y charts. It's just information. No predictions. Nobody knows. Bloomberg, every morning I get my Bloomberg, 5 things to start your day. China lockdowns. Okay, maybe this explains why oil took a dump last night, 2 a.m. Mountain Standard Time. Why they were down 6% overnight. Military aid. Hey, the U.S. snuck the Secretary of State and the defense minister in there to say, hey, we're going to give them more money. So here we are pissing off Russia. A reason why our stock market should go down, right? China shutting down, reason why our stock market should go down. Twitter, Elon Musk is going to take over Twitter. It's going to go private. European stocks were down 2.25% to 3% last night. Coming up, some information. I really just like what's said here. Here's what Joe's interested in this morning. Crypto breaks a lot of people's brains in part, I think, because it's so backwards. There's so much money in it, but nothing actually delivers so far. Bitcoin, by far the most mature project, is not a widely used currency or a stable store of value. In theory, it can be of value to people who are unable to use the existing financial system for whatever reason, which is really the black markets, right? But its usage is limited. It's not even good for privacy and evading the law for political dissidents. As I just went through it, it was very interesting for someone to basically say, hey, we don't know what's going on. We don't understand what's happening. The comment was just made by a couple of you here. The title 42 impact. Possibly, it wasn't mentioned today. I find it just a little, I don't know, how would I say it? I find it a little interesting that we still have things that could impact our market. And for those of you that don't know, Title 42 is the immigration problem with people running across our borders. So, I don't know. I wouldn't think that because a judge blocks an order to let more people across, that it would truly affect our stock markets. But it has in the past, so I'm just making the comment. And the other discussion is inflation lessened. And again, with all due respect, a one-day drop in some inflationary prices doesn't fix inflation. So yes, those are positive things on a whole, but I don't know if it has the oomph or the movement, at least from what I'm seeing, that it would move our markets. So those are parts of our market, but I do think you need to be a little careful on how you're going to extrapolate what will affect a market and what won't. just as a heads up. So I found it interesting. A lot of people don't know what's going on. It's the first time that I've seen that somewhat admitted by anyone, right? Okay, definitely bearish. I need to change this. If you take a look, crossover, went below the 200, went below the 50. If we had a 5 and a 20-day crossover, we've got a crossover. We were over bought on big money, institutional money. So right now, pretty simple to explain, our indexes are bearish, which is why for one up day today, where it's still not above the 50-day on the Dow, I wasn't jumping to pull off protection. We'll see where things head tomorrow. On the S&P 500, it's almost an exact chart. Now, little different. Bearish, couldn't get above the 200, broke the 50, but we have a support on this pivot point, this S1 support level. Still bearish, been over, sold for big money for a while. We do have a little bit of support right here, but that support level comes all the way down to 4150 or 4100. So we are bearish on our S&P 500 index. This is the biggest index, so to speak, that we go up against. In fact, for the last year, the S&P is only up 2.25%. So all the gains that it had last year have since dissipated, and the last running year total, again, that's a CNBC number. And obviously the NASDAQ, bearish, has been bearish. Chart looks ugly, but it did get above that same S1 support level, so we might see some follow through. Big push this week, earnings. We've got so many earnings. It's unbelievable. We had Coke today. Actually, I put Coke in there twice. You can tell I'm following Coke, right? Beat top and bottom line, didn't move very well. We'll probably take protection off of Coke. 3M, DH Horton, General Electric, JetBlue, UPS, Valero, ConocoPhillips, Juniper, Microsoft, Google, Visa on Tuesday. Microsoft and Google can move the markets just by themselves. Wednesday, we have the CM Group, Hog, which is Harley Davidson, Humana, Heinz Kraft, T-Mobile, Amagen, Hertz, PayPal, Gold, Boeing, Ford, Facebook. Thursday, Caterpillar, Eli Lilly, Hershey's, MasterCard, McDonald's, Love, which is Southwest Airlines. Twitter will report. We'll hear a lot on Twitter. Amazon, which can move the market. Beazer Homes, First Solar, Intel, Roku, Skyworks, X Steel, Apple, which can move the market. Friday, Bristol Myers, Chevron, Clorox, ExxonMobil, Honeywell, Phillips 66. There's a lot happening. Economic reports, durable goods for tomorrow. We'll set our futures. But consumer confidence, Case-Shiller new home sales will be important to watch. GDP numbers on Thursday, they're coming down. Don't be surprised if it's a down day on Thursday. PC prices, which is inflationary, personal income, personal spending will move Friday's futures if it's not Apple or, one of the big bellwether stocks. We have 4 bellwether stocks reporting: Microsoft, Google, Amazon, Apple. 4 bellwether stocks that'll move markets one way or the other. How am I looking to trade? Currently protection article on all core holdings. Protection went back on for the banks. I've got some very interesting commentary. A lot of you asked me about DeSantos vote to dissolve Disney Special District. Please understand, for all intents and purposes, this is just a marketing ploy, which makes me think DeSantos will run for president in a couple years. It will not be Trump. Reason why, as you read through this, the counties can't take on the debt, nor can they afford to manage the Disney World in Florida. It's just too expensive. So as much as we'd like to see someone that steps up to the plate, puts Disney in their place for thinking it's okay to how do I say this? In fact, hold on one second. My family kind of passed around an interesting little chat. One of my brothers sent this to the family group text that said, so 19-year-olds shouldn't have to pay student debt because they can't understand the student loans they sign. But 4-year-olds can change gender whenever they feel like it and should be taught between kindergarten and third grade if they're a boy or a girl. Stupid of Disney to back something on such a conservative group that supports them. I really hope JPEG gets the boot. He has done nothing to truly, well, that's not true. His most recent actions have hurt Disney more than bringing Disney Plus online have helped. Please read the article. It's very interesting to find out what's realistic and what they can do, because in all honesty, neither county that's on either side of the Disney Special District can absorb the expenses that it would take to truly pull Disney's special privileges. I finished an article from Kevin O'Leary, Mr. Wonderful, right? The number one money mistake to avoid during periods of high inflation is to keep your money in a savings account. Just something to pay attention to. And it's kind of funny. Someone just said, why is Disney getting involved in such nonsense? Disney really bleep the pooch on that one. And I'm not going to say either one of those words, but yeah, guys, one of the problems with social media is that companies get involved in government type decisions or in our personal decisions. It shouldn't happen. It shouldn't happen, but it's happening right now. You could call it abuse of power, but really what it is, it's someone that's rich in a high ranking position that is I don't know, they're trying to help the world out as they see it. Problem is, most of those people, they're not us. That's not middle America. And they don't see the world the same way we do. They can't sit through 10 years of the stock market going down, and and they easily make ends meet with hundreds of millions of dollars sitting at their disposal. They're just not in touch with the real world. So, short answer, I'm going to give it away. You don't put your money in CDs or savings accounts. Here's Powell, why we're looking at a 50 to 75 basis point rate hike for May. This is why we're going to predict. Read through the Powell take. Says taming inflation absolutely essential, and a 50 basis point hike possible for May. It's coming. As he spoke, he actually talked about doing a 75. So this is why we're going to protect our stocks through an FOMC rate decision in May. I love that CNN blew it. If you're conservative, this is an article to show you how poorly run certain companies are and how they waste tons of money thinking they're all that in a bag of chips. Please enjoy a CNN crash that company did to themselves. Money movement. You need to pay attention to money movement. This one was sent to me by a client. I believe this was Market Watch. I actually got it from Bank of America, the same thing. But you need to pay attention to moving money out of markets. I made the comment that money would come out because of taxes. And I do think it's right, but definitely go through, look at the charts. There have been huge outflows the last 4 weeks in the stock market. It might be interesting if we're now cheap enough that it resets itself and heads back. And I just found an interesting article on 401k balances. Most of you should be pretty good as you read through this. Again, all it does is it tells me, especially if you look at the balances, on average, 161,000 for 45 to 54, 232,000 for 55 to 64, 255,000 for 65 or older. Let's face it, there are too many Americans that will never retire. They haven't saved enough. They will not be able to retire because they just don't have the money. With that said, Peter and Steve, I usually like to leave some time for questions. What questions do you guys have that I can do my best to try to answer? It doesn't mean I can always answer every question, but I do like to save some time for you guys to be able to ask me questions about anything in regards to your money and your portfolios. So, yes, Peter, I actually allow you guys to ask something that you don't understand. So that long put, if I'm understanding your question right, when I showed you some of those positions, those long puts are the right to sell. Yes, we still have the right to sell Facebook at 225. We could sell it, but if we're going to buy back in, that creates a loss and we'd have to wait 31 days to buy back in to be able to allow you guys to capture that loss on your taxes. What we do is we capture those profits and we use those profits to buy more shares of stock. That's how I'm dollar cost averaging without asking you to go put more money in. Peter, I know your other guy over the last couple of years has asked you to put almost double your portfolio in. That doesn't happen here at Hurley Investments. And I hope that's helpful for you. Are there any other questions? And Steve, again, this is, you guys are rather new. We're all here. In fact, a lot of these people that are here tonight have come from other educations or have been referred to me from friends or family. This is where I try to give something that's helpful for you to learn from every week, as well as a market recap. So not saying that you have to say something, Steve, but Steve and Peter, but you guys, this is your opportunity to do so. And there are no wrong answers here. Occasionally, though, I might let a bad word slip out of my mouth, and I apologize. Ida and Maud and Mary, you three again. I've got three lovely ladies here tonight that kind of stay on top of me. Diddy, when she's here, they all let me know if I say something inappropriate. They all let me know. So thank you, ladies. Keep me in line. And one of them just laughed out loud. In fact, now two of them just laughed out loud. But I think LMAO stands for laughing my butt off, right? So technically you're swearing there, Mary. All right, guys. Hey, nothing's coming in. You guys have a wonderful week. I'm doing a little bit of traveling. With that said, we will be canceling Thursday. Tonight I will put out the cancellation, and I will apologize for having my phone on a do not disturb. It's been on it for probably 2.5 weeks. So if you guys are trying to text me, message me, you've got that message, I'm sorry. My phone should never be on a do not disturb. So if it happens again, don't hesitate to send me an email, leave me a message, point it out, hey dummy, get your phone off a do not disturb. Thanks for saying thanks, everyone. I appreciate you being here tonight. Steve and Peter, welcome to the group. I hope you enjoy this. And guys, we'll all get together again next Monday. Good night, everyone.